Hello everyone, it's Wednesday, July 15, and today we will review the charts for the euro and the British pound to identify potential market trends. Yesterday, the euro gained significant momentum against the US dollar, reaching a new one-week high, while the pound followed closely, rising above this week's high but failed to match last week's peak. The dollar's weakness and increased demand for risky assets were driven by the US inflation report for June, which revealed a surprising trend of disinflation. Headline inflation cooled to an annual rate of 3%, sharply down from 4.2% the previous month and below the expected 3.8%. Meanwhile, core inflation, which excludes volatile food and energy prices, remained unchanged at 0% on a monthly basis, whereas analysts had projected a 0.2% increase. Year-on-year, core inflation eased to 2.6% compared to the anticipated 2.8% and May's 2.9%, bringing it closer to the Federal Reserve target of 2%. This had led to expectations that Fed may adopt a more cautious approach moving forward. In addition, Fed Chair Fed Warsh addressed Congress yesterday, affirming that the decision to maintain the benchmark interest rate unchanged at a range of 3.5% to 3.75% made a month ago was the right call. He noted that all committee members agree that only sustained price growth would necessitate aggressive action from the Fed, and the current circumstances do not require such a move. However, we must consider the ongoing conflict in the Middle East and the blockade of the Strait of Hormuz by both the US and Iran. It's no surprise that yesterday's rallies in the euro and the pound sterling were short-lived and quickly reversed. There is no guarantee that risky assets will continue to gain traction, even with the support of US inflation data. Heightened tensions in the Middle East could lead to rising energy costs, which may increase price pressures both in the United States and globally. Now, let's take a look at today's macroeconomic calendar. It features data on industrial production in the euro area and a speech by Bank of England official Hugh Peel. Later in the day, traders are likely to discuss and focus on inflation statistics from the US. The Producer Price Index is expected to show no growth in June, following a 1.1% increase in May. Core PPI is projected to rise by 0.4% monthly and 5.2% annually. However, given the changes in headline inflation figures, the PPI data may also indicate a cooling trend, which could put additional pressure on the dollar and boost demand for risky assets. What is more, Fed Warsh is set to speak again today, with expectations that his remarks will echo points made in yesterday's statements. Traders may also pay attention to speeches by Fed official Lisa Cook and German Bundesbank President Joachim Nagel for insights into future monetary policy directions. Turning to technical analysis, the 1-hour EUR USD chart indicates that false breakouts at 14.42 and 14.59 present potential selling opportunities. Going short on a rebound would be relevant at 1.1479, targeting a move of 15-20 pips. Buy entries could be placed on false breakouts at 14.22 and 14.02, or on a rebound at 1.1380, anticipating a move of 20-25 pips. Speaking of the British pound, the trading setup is similar. In the absence of significant fundamentals from the UK today, in the light of Hugh Peel's remarks, short positions could be considered on the false breakout at 1.3412. This could drive sterling down to 1.3378, where buying interest is likely to emerge. If selling activity is muted at 34.12, the British currency may recover to 1.3439, at which point sellers could look to enter short positions on a false breakout. Sell entries on the rebound would be appropriate at 34.81, targeting a drop of 25-30 pips. Buying opportunities may arise at 33.78 or 33.42 following false breakouts, while long positions on a rebound can be considered at 32.98, expecting a move of 20-25 pips. Best of luck to everyone.